back then we were doing a lot of seconds. Now we're predominantly just doing first mortgages because that whole market changed in 2008. But prior to then, we had a lot of seconds. So what I was doing is telling the borrower's going, look, I'm having a hard time struggling paying Bank of America, and I owe you guys as well. I'm just gonna walk. And I would tell them, no, I'll tell you, how about this? You make your payments on your first. The amount that you're past due with us, you owe us $25,000 in that 2 payments. You owe us $150,000. You owe us a certain amount every month. We're gonna suspend. There's not gonna be any new interest for the next year. No interest is gonna accrue on your loan. And if you keep your first current, that $25,000 that you owe us, we're gonna waive that too.
Wow.
After a year went by, the market was still bad. They give me their financials, they're keeping up on their first, they did not walk. Because if they would have walked, we would have had to foreclose and protect when we were doing seconds. Now we're just doing first. So we encourage them to stay in the property, and then a year later, if need be, we give them another year of no payments. And then once this economy turned around, now instead of having loans that they walked away from and properties they walked away from, now we say, okay, start making payments again to us. The investors were thrilled because yes, they didn't, if you look at the overall, there was a period of time where they were making, 12 and 13%, but because we had to flex and keep borrowers in homes, because ultimately it's best for the borrower and best for us. Yes, there was a period from 2008, I said no investors lost money. They didn't lose any principal, but they didn't get the 12%.
Right.
It dropped down to 8% temporarily for a couple of years. But that's a lot better than the Bernie Madoffs that just took people's money.
Yeah.
So the beauty about trust deeds is we gotta be accountable to both the borrower and the investor. The best way to take care of the investor is to take care of the borrower. Other brokers, it's all about the investor, the borrower doesn't pay, let's foreclose, let's take their home away.